In this video, I want to discuss what sort of expenses will be tax deductible in your property business. Now, to give you a quick summary, see, if you're employed, your employer is gonna deduct your taxes first and then give you your net amount. So if you've got any expenses you need to be making in your own home, such as say if something broke and you need to fix it, whether that's a bathroom leak or whether that's painting something that's now wore out. If you need to do that, you're going to be paying for that out of your net income from which taxes have already been deducted. However, when it's coming to a property business, things are slightly different and you can get a lot of tax write-offs. So if that's what you want to see and learn about, then stay tuned. Hello everyone, if you're new here, my name is Abbas Pardhan. I'm a property investor and I'm an owner of an estate agency called 10x Rising. On this channel, I share with you the inside of what we go through on a day-to-day basis that may help you on your property journey. So if you enjoy the content, please smash the like button, subscribe and hit the notification bell so you do not miss the next videos. Before we get deeper into this, I need to let you know one thing, that I am not an accountant. This video is not any professional advice, rather it is only for information purposes. So when it comes to expenses and how it would work with the accounting perspective, there's some expenses that will not be deductible in whatsoever, whether that's capital gain tax or deduction from your rental income. That's the first thing. Second thing is that maybe some of your expenses will be deductible from the capital gain tax you will have when you are looking to sell the property. The third types of expenses would be those that will be a tax deductible from your rental income. And the fourth one, these again might be or might not be depending on specific circumstances that your accountant, who should know all of this, will be able to help you with. So in this video, I want to talk about the few things that can be tax deductible from your rental income, because this is what I do, this is what we use. When we're making expenses, these are what we know will be a tax deductible expense. So that's what I can share with you from my own personal experience. Now, you should know that when you buy a property, there will be a lot of expenses that you will incur. That may be your conveyancing fees, your surveyor's fee, your stamp duty, your deposit, all those kind of fees. Now, these will not be deductible from your rental income. Rather, it is something that will be compensated or deductible from your capital gains tax when you're looking to sell the property at the end of your term. So if all of these large major expenses, your deposit, which is such a large expense, if that's not going to be deductible from your rental income, then what is? So let's get into that. First thing, when you have finally gotten a property and you've got it under mortgage, you will have those interest payments. Right? You are going to be paying those interest payments on a monthly basis. These will be deductible if it is under a limited company. If it is under your personal name, Section 24 applies and you will not be able to write these expenses off from your tax that you will be having to pay at the end of your term. However, if it's under your company, then all the monthly payments you're paying to your lender in terms of your interest payments, these will be tax deductible, which your accountant will advise you with. Second thing, repairs and maintenance. When you have a rental property, surely there will be repairs and maintenance. Hey, come on, someone is living in the house. Definitely there's gonna be stuff that break or need repairing. So these kind of things will be tax deductible. However, if you're making improvements to the property, then perhaps it may not be tax deductible from your rental income. Rather, it will reflect on the capital gains tax that you'll have at the end of your financial term. So it's quite important to make that aware to your accountant that, hey, I've had all these expenses, they surely need to be tax deductible. Then the third thing is that you've got, of course, as the landlord, you will have legal fees, you'll have property management fees, you will have accounting fees. All these fees that are related to your property management, these will be tax deductible. Well, you will have expenses perhaps in drawing up leases, or you will have expenses when it comes to serving notices and evicting a tenant when it goes to court, because those things are so expensive. So these will be tax deductible along with the fees you will pay to your accountant. So any fees, whether that's your legal fees, accounting fees, or your property management fees, that includes the fees that you pay towards your letting agent, all these will be tax deductible from your rental income. Then you've got your insurance. Surely a property needs to be insured. What if there's an earthquake? It collapses. What if there's a fire? So as long as you're of course meeting the rules and regulations from the insurer, then the insurance policy that you've purchased will be tax deductible as well. Perhaps if it's a lease property, you're going to have ground rent that you're going to have to pay for. That's going to be tax deductible. If it is a HMO that you own and you're running it, you're the operator of the HMO, then you're going to be paying, of course, electric bills, gas bills, water bills, Wi-Fi bills. You'll even have council tax bills. And of course, you will have all the certifications you need to get, gas, electric, EPC. You will also need the HMO licensing fee. They are all tax deductible. Then when it comes to any services that you provide, for example, you're providing furniture for your HMO tenants, the amount you've spent on that furniture is also tax deductible. Just so you get an understanding, basically any service you provide to the tenant or their property will be tax deductible as long as they are not employed by you. As long as the person who's providing the service, whether these are smoke alarm certificates that you're doing, or the regular inspections in your property, or you're paying someone to do viewings for you at the property, a company like Viewer, for example, if they're doing the viewings for you, that is all tax deductible as long as the person is not employed by you. Because if they are employed by you, then there will be a lot of other regulations that you need to be aware of under the regulations of employment, the employment laws. So you need to be aware of that. However, if that person providing you with those services is self-employed, then it will be tax deductible. The other one, which is also one of my favorite ones, is the traveling expenses. I personally travel a lot, and I do travel for business purposes. So whether that's a flight ticket, whether I'm going to meet an investor or to see properties overseas, I have that as tax deductible because it's a business expense. So as long as you can justify it and your accountant agrees with it, it can be tax deductible, whether that's you staying overnight in a hotel. If you're local, say from London, and you're going to invest in Liverpool, if you're staying overnight in Liverpool, that night in the hotel should be tax deductible. The travel that you had up to 10,000 miles a year, that will be tax deductible up to 45 pence a mile. Further to the 10,000 miles, it will be 25 pence per mile that you will get as a write-off. Then you've got administration expenses. Surely you are having to do all these things from an office space or a place that you call an office, whether that's your home or that you're actually renting an office space. So if you're renting an office space, of course, that is a tax deductible because it's your business place. But if you're renting from your home, so that's just your home and you're working from one of the rooms, then there are specific regulations around it, how much you can get as a write-off when it comes towards your accounting period. Your accountant will be able to guide you based on how long you're spending in that office space, what the rent is, etc., etc. A couple of regulations in there. So I hope you get a gist of it. Any expense that is based on your rental property that's around that business that you have will be a tax deductible. So that means any income you get, you don't pay taxes first and then spend what you need, because that now you've just paid like what, 20%, or depending on what tax bracket you're in, you're already spending the tax first and then doing what you need to do. No, it won't work like that. You'll get your gross income first, you pay out what you need to pay out, then you pay your taxes. Quite different to how it would work if you're employed by someone, because how the employer will treat it, they will pay your taxes first, then they will give you the money, and then you've got all your expenses. So a big chunk of yours is already gone to taxes. If it's a property business, then you get the whole thing first, spend what you need to spend, then pay the taxes on the remaining profit that you still have, and whatever is not a tax deductible. Again, like I must remind you, I'm not a financial advisor or an accountant. It's just what I've seen, I learn, I do every day that I'm trying to share with you as information. So I hope you find this information useful. If you do, please let me know in the comment section below. Also, like the video because it really helps me. Subscribe, hit the notification bell, and I will see you in the next video.